an upside movement, levitated back up to this 15-minute and 4-hour supply zone. Price tapped both of the zones, swept liquidity from this region, changed character after the supply zone tap, the 15-minute supply zone tap, it changed character on the 15-minute and the 5-minute structure. After it created inefficient push to the downside, swept liquidity, created a fresh supply zone, and we can wait for a supply to be tapped and enter on a 1-minute chart with or 1-minute entry models. Either if it's a flip, either if it's a change of character, either if it's a continuation, we will enter in a trade. That's our master plan here. But one more noticeable thing, we can also miss this trade. Just like the previous one, there's a chance that we'll miss this trade. This is also a textbook example, but there's a chance we will miss it. Okay, so let's see the 1-minute structure. Okay, so let's see the 1-minute structure. As you can see, this was the last 5-minute demand zone that created a new high on the 5-minute chart, and also this was the 15-minute inside bar that we just refined on the 5-minute chart. Okay, this was the 15-minute supply zone, and this is the 4-hour supply zone. As you can see, price actually tapped this 4-hour supply zone after a huge inefficient push, and this was the last demand zone that caused that push. So here's the last demand zone on the 1-minute chart that caused the less inefficient push that tapped us into the 4-hour supply zone. And instead of breaking below this demand zone and breaking below the strong low, because this is a strong low, it created a new high. So instead of breaking below the strong low and the demand zone, price created liquidity, as you can see. Here, liquidity on the downside, and here liquidity on the upside. So we have triple taps on the upside, triple bottoms on the downside. So this means this liquidity have to be swept on both sides, right? Okay, as you can see, price tapped the zone first, couldn't break above the last high point, couldn't break above it. It tried once, second and third time, but it couldn't break above. And the final push came into the market from this candle. So the final push came into the market from this candle. As you can see, this was the 1-minute zone that created the last high and breakout structure and liquidity sweep. Okay, but right now we are in the 4-hour supply zone, and in a 4-hour supply zone we have to wait for a 15-minute or 5-minute change of character, as I told you, right? So 5-minute change of character happened from this supply zone, and this supply zone flipped the 5-minute demand zone. So we are waiting for this supply to be tapped and not the 1-minute supply zone that flipped the 1-minute demand zone, because we are inside of a 4-hour zone, right? This is a really important part, because this supply zone, this 5-minute supply zone, changed character on the 5-minute and changed character on this 5-minute demand zone. Because we are inside of a 4-hour supply zone, we have to aim for this supply zone, and we have to search for a reaction on this supply zone and change of character on the 1-minute structure on this supply zone. And we are not aiming for 1-minute zones right now. So these zones are irrelevant right now. We are aiming for this one. Okay. So I will just play price forward and wait for a reaction on this zone. So let's just play price forward. One more thing, as you can see, price actually broke through this demand zone also. So this is a really, really strong confirmation that the trend might be changing from bullish to bearish, right? Because price broke through several demand zones, either on the 1-minute, either on the 5-minute, and broke through many demand zones, swept loads of liquidity from here, from here, from here. So yeah, the trend might be changing from bullish to bearish. And the overall higher time frame trend, so the 4-hour trend, is still extremely bearish. Remember, we are aiming for short opportunities because the overall structure, the overall trend on the 4-hour chart is extremely bearish. Okay, so let's just play price forward. As you can see, price is ranging now. Swap this upside liquidity with this movement on the way to tap the zone, and the zone tap actually happened, as you can see. Let's wait for, okay, a huge reaction came into the market, as you can see. And sorry, I will just replay price here. As you can see, this was the last demand zone that tapped us into the 5-minute supply zone. So this demand zone was the last zone that created inefficient push, break of structure, and liquidity sweep, and tapped us into higher time frame 5-minute zone, right? So let's just take a closer look. As you can see, here's liquidity. First, second, third tap. So here's a liquidity line. Here's inefficient push. Here's break of structure. So this is a really valuable demand zone. Okay, as you can see, price reacts on this zone, right? Reacted on this zone. Give immediate reaction after the tap, after the mitigation. Right now, we will have a flip scenario because as you can see, price flipped this demand zone. Price broke through this demand zone, and this was a valuable demand zone, valuable 1 minute demand zone, because as I said, it created inefficient push, break of structure, and swept liquidity and tapped us into a higher time frame zone. So basically, it has 4 criteria. So this is a really valuable zone. Okay, as you can see, we have an extreme zone up here, extreme supply zone, but this extreme supply zone did literally nothing. It didn't change character, it didn't flip anything, so this is nothing. The right supply zone in this case will be this one, as you can see, because price created inefficient push from this candle, from this supply zone, and this candle was the one that caused the break of this demand zone and the flip. So this will be a 1 minute flip zone. We are aiming for this one. We are setting an order limit, a sell limit on this block. And as you can see, because this is a equilibrium entry point, because the wick is bigger than the whole body, than the 50% of the whole body, then we will use an equilibrium entry. I'm just setting a gap box up here, placing a sell limit on the 50% of this block. Sorry, the recording stopped again. I just realized that I just filmed the whole video and the end was missing. So let's just continue. Okay. So here's the last supply zone that created inefficient push to the downside. I broke through this demand zone and I just did set an order limit on the 50% of this candle. So this is an equilibrium entry, right? Okay, I will use a 2 pip stop loss because, as I said, I normally use 1.5 or 2 pip stop loss, but 90% of the time I will use a 2 pip stop loss. So let's just keep it that way. I will aim for the next unmitigated 15-minute demand zone, which is this one down here. This is our last unmitigated 5-minute refined from the 15-minute demand zone. So this will be our target point. Okay, as you can see, the risk-reward ratio is almost 1:9. So this is a really, really good trade. As I said, we are trading for money. We are trading for percentage, and we are not trading for our ego, right? So 1:10, 1:9 is a really, really good and huge risk-reward ratio. We will gain almost 10% profit. Just imagine 10% profit in minutes. That's a really, really good risk-reward ratio. Okay, so let's just play price forward. As you can see, more inefficient push came into the market. A pullback started. Price created liquidity just for this zone and almost broke structure, but it didn't break structure because this is just a weak break, not a body break. So as you can see, we have a liquidity here, a really, really good liquidity line just for this zone, right? So this is one more confirmation that this zone will be the right zone and not the extreme one, because this zone has liquidity just below it. This zone has no liquidity, or maybe we can call this a liquidity, but as I said, this zone did literally nothing. It didn't change character, it didn't break supply, it didn't break demand, sorry, and didn't flip anything. This is the flip zone, and this zone now has liquidity just below it. So this is a one more confirmation. It has all the 3 criteria again. It changed character, flipped the zone, created inefficiency, created liquidity, swept liquidity. So this is a really valuable, huge opportunity zone. We are still keeping the order limit. Let's play price forward. As you can see, price swept the liquidity and tagged us into the trade. Right now we are in the trade, as you can see, and play price forward. After the mitigation of this zone, price immediately turned down, created a reversal, as you can see, and our trade is running in profit right now. Really, really good profit. And this low has been broken. This is a weak low because it couldn't create a new high. So the couldn't break above this last high point. So this means this is a weak low. And if price breaks through a weak low, we will set our stop loss to break even, as I said. So our stop loss is right now in break even. I will just mark it with a red line. Let me just change the color, please. Okay, so our stop loss is in break even. Right now, we have no risk on this trade. If it hits our break-even point, there will be no profit and no loss. This is a really, really good trade. Okay, let's see what happens next. As you can see, price broke structure to the downside, but I won't set my stop loss here because this is a liquidity line. I will just keep my stop loss in break-even. Let's see what happens next. As you can see, price is building up more liquidity.